Friday, traders. Greg here with a market update. Okay, so look, it is impossible to talk about markets or give a market update without talking about Trump and Trump's tariff policy. For the simple reason is because that is what is moving markets at the moment. Whether we like it or not, we are all trading tariff policy at the moment. The beginning of the week this week was was positive. We saw US equity markets up 3 days in a row on the back of market optimism that potentially there was some flexibility with respect to tariffs, but that all came back crashing to earth in the last couple of days when we got Trump's announcement on auto tariffs. That they're going to be 25% blanket across all countries importing cars into the US, and those tariffs obviously are on the high side. So we saw markets obviously react negatively, equities back down. We're seeing some volatility back in markets and some wild ranges and swings in the market. Look, I'd suggest that obviously the tariffs and tariff policy are a negative for the market. It's no surprise, everyone knows that. But look, it's something that's not going to go away anytime soon. So for the market to have any sort of meaningful rally, I think that at the moment is certainly it's not possible with this tariff policy weighing. So selling equities on rallies is probably the preferred strategy at the moment, and it is currently working quite well. So moving forward, that's probably what you want to be doing. But look, the good news is that as far as uncertainty, and it's something the market hates is uncertainty, is that April the 2nd is next week. It's next Tuesday. That's when we find out about reciprocal tariffs. It's when we find out the main part of Trump's tariff policy. So that's good news. So the market's finally going to find out exactly the details. And it'll also be interesting to see how other countries react to those reciprocal tariffs and whether they fight back. There's already noise that Canada's planning to fight back in the US, but just waiting to see the details on April the 2nd. So one thing is for certain is that one way or the other, early next week, we are going to see some volatility in the market. We're going to see some big moves. So you need to be prepared on April the 2nd focus because these markets potentially will get wild. Okay, now just sticking with tariffs, the market is having a serious conversation at the moment about how the tariffs can impact on Fed policy. Obviously, Fed policy is extremely important for global markets. So the debate is whether or not the tariffs are a temporary one-off increase in prices, or whether or not they are a more permanent increase in prices and then lead to an inflation problem again. We do have many Fed speakers speaking quite regularly. This week we have had a couple of Fed speakers that have actually been now very worried about that the tariff policy could actually be more permanent. And one Fed governor has actually come out and actually said that that being the case, that maybe the Fed might actually have to raise rates again. So that's the first time that we've actually heard someone from the Fed actually talking about rate hikes. We have a market that is pricing in 3 rate cuts by the Fed. So certainly if we did see inflation in the next couple of months on the back of what's going on with this tariff policy increase, and the debate shifts more towards the permanent price increases, and the market has to start pricing out those 3 rate cuts. I would suggest that that's going to be very bad for the market. Potentially this market could get crushed. Obviously that's something that's not going to happen overnight. It's something that we're going to be monitoring quite closely, and something that over the next couple of months when we get CPI numbers out, they're certainly going to be a huge focus for the market. Okay, so moving along, one market that's certainly doing exceptionally well and is actually benefiting from what's going on with all this uncertainty, and that's gold. So another record high for gold overnight at 30.59, 30.60. So record daily close. Looks like we'll probably get another record weekly close and potentially, so a lot of confidence, record monthly close coming up as well soon. So doing exceptionally well. Short-term targets, look, you're looking at probably 3,100 is certainly realistic, and maybe on extension up towards 3,150. On the downside, good support. It's at 3,000 obviously, and if we did get a big retracement down towards say 2,950 is probably the buy zone if that was seen at some stage. But certainly, being long gold, it's working exceptionally well. So yes, that is suggest not trying to fade this gold rally because it's not working. Silver is worth noting. It actually had a better rally than gold last night. It was actually up 2.5%. It's closed above $34. Big level for silver is $35, big psychological level. It's a level that hasn't traded above for a good 10 years. Silver's record high is a long way away. It's $50. A lot of the silver bulls are getting quite excited. Certainly, looking for that break of $35, and if it does break above $35, potentially, we see a big spike, a silver squeeze, and maybe, just maybe, those $40 targets may be realistic, further out on a break of 35. So certainly, I'd be keeping an eye on silver, and long silver certainly at the moment is the way forward as well. Other commodities are doing well. Copper's put in a record high. Crude's back up towards $70 as well. So the commodity space seems to be doing exceptionally well at the moment. It seems like the world is happy to buy hard assets, and maybe it is the place to hide at the moment with what's going on with global markets. Okay, so moving along today, yes, we do finish with some very important data out of the US. That's US PCE inflation data for February. It is the Fed's preferred inflation gauge. Month on month looking for a 0.3% increase, and year on year for core PCE looking at 2.7%, which is marginally up from 2.6% the previous month. Now look, I'd suggest that this number is obviously very important, coming just before reciprocal tariffs early next week on Tuesday. The last thing that this market needs is to see PCE inflation come out above expectation, that we're already seeing some sort of inflationary pressure. Market will not like that, and potentially we could see a decent sell-off if that did eventuate. But market friendly if it does come out below expectations. So certainly keep an eye on that PCE data tonight. Look, at the end of the week, before the weekend and early next week, I'd be surprised if this market does, unless we do get some comments from Trump. We don't know when they can come out at any time, unless there's some sort of positivity from him before the close. We do have a nervous market, and I'd be surprised if they went in risk bid into the weekend and early next week. Anyway, good luck with your trades for the end of the week, and we will catch back in with you early next week.